All right, so let's go to the chart here. Next one here we have reading volume histogram and identifying ultra high volumes, average volume, and low volume. Okay, all right. So I'll go to the chart. I will remove this over. My target was this one actually. You see, this was my target, and the price is going down and down. So my analysis was correct. So I mean, one thing I need to tell you that if your target is hit in trading, right, you don't need to care about how far it goes. Okay, so don't panic it.
Yep.
So usually what happens here, that once the price was broken, what did you see here? What kind of bar did you see here? This one. I told you about this bar. Do you remember? Key reversal. This was actually a key reversal. It rejects the high and closing on the lows. Okay, or you can also call it as a top reversal, but it's not a top reversal. This is also key reversal. Every time you see this bar, every time you see this kind of bar, you will see a reversal. Can you see?
Yes, I see.
All right, yeah, and you will see that the volume will increase either in the preceding bar or in the bar following it. For example, here you see the volume was low, and then this key reversal was then sudden increase in the volume. Can you see sudden increase in the volume here as well?
Yep.
The preceding volume is low, and then in the next bar, where key reversal, there is sudden increase in volume. Here, the volume is high, and the preceding bar, we still have a high volume here. All right. So any volume which is above this moving average is actually high. So I will tell you about this right now. What I mean to say. So let me remove this volume bar and let me add volume again. From indicator, we go here and write down volume. Okay.
Okay.
Okay, and volume is here. You can see. Okay, you can bookmark it. If I press the star, it will go into my favorite list. So you can see volume from here, favorites. So now volume is added. So what I will do, I will go here. This is volume here on the top. So first of all, I will go here and go to move to new pane below. I will click this. So there will be a separate window for, if I, originally it was like this. All right, so it was the chart, though it was messing up with the chart, right? Like it's interfering with the charts. So it can mess up your analysis. So what I suggest is just go to here, this 3 dot bars. You will go to move to, and then click on new pane below. It will be open a new chart. Okay. New window.
Okay.
New drop down window, right? Okay. Now go to settings here. Your length should be 20. Okay. This is a discretionary, means some people use 20, some people use 30. Okay. Wyckoff used to use like 20, but some of the Wyckoff traders, they prefer 30. All right. So it's up to you, but I suggest 20. This is it's much more better to read, right?
All right.
So go to style. You have to go to style. You can see the growing and falling volume. This all right. You will see the volume MA. If you click on this, then there will be a volume MA line, moving average line, a volume MA. So you can change your color if you want to change. Make it a little bit bold, okay, and then click on OK. All right. So we have volume MA now. So this moving average is actually the average volume. Okay. Now, if I click on this one, double click, you see double click. If I double click on the volume window, this volume window will become enlarged. If I double click again, it will become okay. Got it? It will minimize.
Got it.
So if I double click it will maximize. So here I tell you, let's suppose this is an average volume. Okay, this suggests so any volume that is hitting this bar here is actually average volume. These are average volumes. Got it? Because it is coinciding with this moving average. This average volume. All right. Anything that is above this moving average is known as high volume. All right. Anything that is below this moving average, like this volume, this is low volume. Got it? Low volume.
Yep, got it.
So these are low volume, this is high volume. Now, one is the ultra high volume. Ultra high volume will form like this, you know. Ultra high volume will be like this. I told you before as well. It will be like a peak. So this
like
volume will be like a V. So this volume will be ultra high volume. For example, in this portion, if you take this portion, it goes up, and this one will. So why? Because we call it. Have you learned about norm? Do you know about normal distribution, bell curve?
Yeah.
Okay, so you know, like the mean is distributed on, like in the middle of the bell curve. So it's just like an inverted bell curve, you can say. This is a bell curve here. So high volume will be, mean volume is here, below it. Okay, this one here would be the highest volume. It's like a central limit theorem, bell curve, normal distribution. Got it? So the ultra high volume is normally distributed at the top of the bell curve.
Okay.
Okay. So
Okay.
because like the ultra high, because if you take a gradient of this one here, okay, if you take this one here, if you see the x value, the highest value will occur over here. Am I right?
Yeah.
If you know about the quadratic curves, okay, like for example, if you have learned about quadratic curves, we have a quadratic graph. So this one was the maximum value, and if you have a quadratic curve here, this one was the minimum value, right? So tangent to here
Yeah.
would give us the
Right.
maximum value. Tangent to this here at this point will give us the minimum value. Simple math, right? So similarly, we have this one, right? So this one will be, so these are very easily identifiable. Can you identify? Just remember about the bell curve and the maximum, like the quadratic graph with the maximum value. So you will identify it. Or you can also say it's a hill, like a hill. The peak point of the hill is actually the maximum, the ultra high volume. Okay. So this is first concept here. So now you will see at every ultra high volume, there is always a turning or there is a breakout. Two things can happen. Number one, either the market turns or, okay, turns means reverses. Reverses or there is a breakout. Because breakout, for a breakout, we also need, for example, if the price range is like this, let me give you an example here. This is the price range, okay? All right.
Right.
Show you is the price range, and here you will see this, the price is ranging. Then suddenly there's a spring here, okay, there's a fake break and then goes outside. This one here, this fake breakout, there will be a high volume. Or once the price breakout to this level, there will be a high volume like this. And then the price will retest on a low volume and then it will go up. Got it? So generally, when I was telling you about a trend, okay, so the trend, for example, if we have a trend here, the uptrend, I'm showing you. Can you see my screen here? The
Yep.
whiteboard? Okay, all right. Let me draw that trend.
Yeah. I see a white.
Yeah, trend here. See, right? We have a trend. Sorry. So this is an uptrend, right?
Yes. Right.
Hold on. I came in at the door, so hold on. Okay. Hello, are you there?
Yep. I'm here.
Okay. Okay, all right. So we have a trend here, right? Uptrend. So you will notice one thing. I told you about. Okay. So I told you about one thing. Like this is what known as what? This one is known as what?
Uptrend?
This one is known as impulsive wave. Do you remember?
Yes, yes.
Okay, impulsive wave is a wave that is in the direction of the trend. Okay, and any wave that is against the direction of trend is known as corrective wave. I told you this, right?
Yeah.
So in an uptrend, whenever there's an impulsive wave, during the impulsive wave, what will happen? The price will increase, the volume will increase as the price goes up. Got it? Because the buyers
Okay.
are coming, so buyer needs a high volume. And you know the buyer's strength is reducing on the down wave, on the down move, during a corrective wave, the buyer's wave is the buyer's strength is decreasing and the sellers are increasing. Am I right? So what happened to the volume? The volume will reduce. During corrective wave, the volume will decrease. Understand? And then during this wave as well, the volume will increase. Got it? And during this down wave,
Okay.
the volume will decrease during corrective wave, because volume is just like the strength. The strength of the move is known as volume. So during uptrend in the impulse wave, the strength of buyers is increasing. So we have increasing volume. During a corrective wave in an uptrend, the strength of the buyer is decreasing. So we have decreasing volume. Got it? Similarly,
Got it.
if we take the example of, let's suppose, a down wave. So what will be the situation of down wave? So this one is what? This wave down is what? Impulsive or corrective?
Impulsive.
This one, corrective.
Corrective.
Got it? Do you know about the term retracement?
Yes, but I'm not
Yeah.
familiar with it. I've heard the term.
Retracement and correction is same. Got it? Corrective wave or retracement wave, we also call it as retracement. Okay.
All right.
So what happens as the price is moving down? Okay. So why we have this kind of move, like corrective moves? I will tell you the reason behind it. The reason is very simple. For example, the sellers are selling. So what happens? There will be buyers who there are sellers. Okay, there are sellers who will take profits. Okay, they will take profits over here. So the buyers will dominate for a while, and then the sellers will sell again, and then they will take profit here, and then the price will go up because the sellers exit the market and the buyers enter the market. Because the buyers are not stronger as compared to sellers. That's why we are moving down. Got it?
Okay.
Okay. All right. So if we just see the volume here during an impulsive wave, during this section, what will happen? I told you the volume will increase during impulsive wave. Okay. Now, because we are in a downtrend, so this volume is representing the sellers. And here we were in an uptrend, this volume was highlighting the buyers. Got it? And
All right.
during an up move, so you will say it's buying. It's not actually buying. We can say like this, that the seller's power strength is decreasing, seller's strength is increasing. Seller's strength is increasing, seller's strength is decreasing. Got it? So when the seller strength is decreasing during this phase, what happens? The volume will decrease. Got an idea? And during impulsive wave, again, the volume will increase. Now I can show you on the chart. This is a basic concept of this thing. For example, this is an uptrend here. Okay, we are in uptrend here. What happens? What happens here during uptrend? We are up move here. From this point to this point, we have an up move. What happened to the volume? Increase. Can you see increase in volume? And now we are moving down. So what happens here? Volume decreases. Again, we are moving up. So now the volume increase. Again, we are moving down. So volume decrease. Got it? And then we have short of this one. So decreasing volume. All right. And then we are again moving up. You can see here volume is increasing. Can you see this bullish volume is increasing?
Yep.
And now, as we are moving down, as we move down here, at this point, the volume decreases here, decreases. Can you see?
Yes.
Yeah, so this is the pattern here. And as we move up, now here at this point, what happens? The buyers are decreasing. As we now, this is the first sign when the volume suddenly from increasing, you see the volume is increasing all the way up here, the up volume. This green volume is, and then suddenly it started decreasing. What does it show? It shows that uptrend is ending. Uptrend is ending. This is first indication. Got it?
Okay.
Because buyer's volume is decreasing during uptrend. So that is why we call it as that this is a first indication that uptrend is ending. And uptrend really ends here. You see, after this, what happens? Uptrend ends. It tested here. Now, if you draw another thing, as I told you one more thing about it, that if you draw the channel from this to this, and you connect it from this high to this high, what did you see here? Where did you see here? What is this? Overbought, right?
Okay, overbought. Okay.
Right? I told you, when you combine the volume with the wave, with the structure, you will see how it making sense. Overbought. After overbought, what happened? We have a huge volume at the overbought. And after that, what happens? The buyer's volume suddenly started decreasing. Here it was increasing all the way up, but here it suddenly started decreasing. Can you see? On here, on this wave, it is decreasing. So this is a point where uptrend is ending. You see how after overbought, the buyer's volume decreases and then it goes down, retested, and then the reversal.
Okay.
Okay. In the same way, if we see the down move here, if we draw the down move here, what happens throughout the region here? You see, as the price goes down here, we have an increased volume as the price goes down from here to here. As the price goes up from here to here, you see here, what happens? The volume increase. Can you see? Big volume. And then as the price goes down, so actually, what will happen that as we are going down, the price should, because we are in a downtrend now. So as we go down, the volume should increase. The like the seller's volume should increase, and the buyer's volume should decrease on the retracement or corrective wave. So if you see this move here, what happens during this move? What happened during this move? The volume is decreasing. Can you see? Now this extra volume, you say, oh, this is an increased volume. So it means that the sellers must be more. Yeah, this volume is coming from the sellers on the top. Got it? Because you see the bar, how it's closing, how the bar is closing. It's closing on the lows. Can you see? So it's a seller volume.
Yep.
It's not a buy. This is not a buyer's volume. People say it's a buyer volume. It's not a buyer volume. It's actually a seller volume. Got it? And as the price goes down again, you see what happens to the volume. As it goes down, you see from here, from this point here, the price goes down. What happens here? The volume is increasing. Can you see?
Yeah.
Yeah. And then as here you can see. Now here is the first indication that the buyer's volume is increasing. And as the price goes up here again, here the buyer's volume increasing. What does it tell you? And as the price is going down, the seller's volume is decreasing. Now what is happening? What is happening here? Actually, the downtrend is changing into an uptrend. It is a first indication from the volume. Can you see?
Okay.
Okay. Now, if we draw the channel here, you will see an overbought situation oversold situation over here. That's why this is happening. See here exactly what happens here. Oversold. Can you see? As the price is oversold, you will see a decrease in volume. When at the oversold, the price is very high, but when the oversold here is retested, it tested again. Okay, what happens during this move? The seller's volume is decreased. Can you see? So this shows
Yep.
me that the price is changing the direction, and now the price test at one time, this first test, the price test at one time, this resistance, the price test second time, and then after that, the price rallied higher. This is the first attempt to rally high, but what happened? As the price reaches this area of supply, what happened? What did you see here? The huge rejection bar from the buyers. Can you see? So at this is the point, if you are going, if you have taken a long trade, if you're buying this order, you must exit on this point. If you see this, because first of all, it's actually a supply line, and then it's a huge volume, and then the buyers are exiting. Got it?
Okay.
The reason why we have high volume here, you will say it's because the buyers are increasing. Yes, the buyers are increasing, but at this point, when we have very high volume, I told you, when high volume means two things. Number one, it can be a reversal or continuation. Do you think it's a reversal or continuation? Seeing this bar, you see this bar and tell me, is it a reversal or continuation?
Reversal.
Why?
One of the key reversal thing.
Yeah. Okay. First reason is it's coming on the supply line. This is the first line. This is supply line. This is oversold line, right? So first reason is coming on the supply line. The second reason. A while back, I told you about the bars. You tell me about the closing of the bar. This bar closes like this. This is what? This is what? Closing on the lows, right? It's closing near the lows. So this is what? I call you, this is bearish momentum. Do you remember? This bearish momentum.
Okay.
So this is actually a bearish momentum. This is a bearish bar. You will call it as a bearish, but if you go and change it the candle, you will understand it's a pin bar. Got it? So it's actually a bearish bar.
Okay.
Okay. So that's why we have to exit the trade. So remember one thing, you have to notice that first of all, if the bar is closed like on the middle, if the bar close on the middle like this, or bar close like this actually means it's a selling bar. Okay, the color of this might be the bullish color, but because it's closing on the mid or closing on the this mid, is means this there is indecision. There can be buyers or there can be sellers. But seeing the context here, if you see the context here, if this bar like this mid close bar comes over here on the supply line, we need to close it. We need to close our trade because there's a possibility of sellers over here. Got it?
Okay.
Okay. All right. So you understand how does the volume work out? Now if you see the uptrend here, you will see the same thing. As we go up, you can see the volume is increasing throughout. As we go down, because it's an uptrend, as we go down, the volume is decreasing. Can you see the volume is decreasing? You see the red volume.
Okay.
Notice the red volume, how the red volume is decreasing. How the red volume is decreasing, because during the retracement, we only see the red volume. And see now, here, we go up here, what happens? The first of all, volume is decreased a little bit, and then the volume increased. So overall, the volume increased during this session. Got
Okay.
it? And if we
Got
see
it.
here and go down here, what happens here? From this point to this point, the volume decreases. Got it? Because it's an uptrend. And now what happened? As we are going up here, the last part, what happens with the volume? The volume is actually decreasing. Can you see? A very small decreasing volume. What does this tell you? What does this tell you? This part, last part. This tells us that here uptrend is going to change into a downtrend. And once we go down, what is the volume of the sellers? The sellers volume is increasing. Can you see?
Okay.
So this shows us that the uptrend is changing into a downtrend. Very soon it will change. It has not changed right now, but very soon it will change. What is the first indication? And what happened after this test and the price reversed? Can you see?
Yeah.
So this is the pattern of volume which you need to remember. So when the volume of the impulsive wave is decreasing and the volume of the corrective wave is increasing, it means that the uptrend, it means that the trend is going to reverse. What do I mean to say? Impulse wave should have increasing volume and corrective wave should have decreasing volume to keep trend intact. But if suddenly impulse wave starts printing decreasing volume and corrective wave starts printing increasing volume, opposite, okay? Then
Okay.
this means trend is about to reverse. So, got it? Now, at this point, I will not start selling it right over here. I will first draw the structure. This is my first indication. Remember that. I told you again and again. This is my first indication that trend is going to reverse. Now, if I try to sell over here, I will lose money. It because right now from the information I have from this trend, I just know that the trend is about to change. The trend is going to change, but when, I don't know when. For that, I will draw the channel here. When I draw my support and resistance line and channel, then I will know when it will change. Got it? For example, if I draw here, the channel here, and this one here. So here, this one here, right? This one. Yeah, this one here. And we can draw the reverse trend line. I told you about reverse trend line. Reverse is a trend line. Shortening of thrust. So this is the point where the trend is changing. Got it? Here we got the early indication, but here now we got the confirmation. And after confirmation, as we go down and we see that here we have like a huge volume here, and seller's volume buyer's volume is decreasing, and we saw this bar here, this one, this key reversal with increased volume. This is my point to sell. This is my point to sell. So what I will do, I will sell at this point, at the close of this bar. I will put my stop loss right over here, okay? And I will see where is my take profit. My last support was this. This was my last support. So I will place my target right over here, my take profit. Okay, I will draw the drawing tool. I will grab it, short, I will go short here. My stop loss is right over here at this point. Okay, and my take profit would be at this last support, which is this one. All right, last support here.
Okay.
Right, this is actually the last support. This where the market actually was. This is the last support. Right, so I must at least my target should be this one. So that's 2.1. Got it?
Oh, okay.
Okay. Now here, what happened? Do you think the price will reverse or go up here? Here at this point. Here at this point, now it's going up, but sooner it will just reject this market right over here, and then it will go down. Why? Why I say it will go down? Because as we are going down, we see increased volume. Here, you say, oh, this is an increased bullish volume. Yes, the buyer is coming down, but the buyers came here. But as the buyer go up, as we go up, what happened? What did we notice?
The volume go down.
The volume, the buyers do not have enough strength. So it means that the downtrend will continue. Got it?
Yeah, right.
Okay, all right. So where would I sell? How would I sell? Like, okay, what is the perfect position to sell this market? All right, so what I will do, I will draw my trend lines here. You can see, draw my trend lines here. All right. And I will draw my last resistance lines. As I told you, you see, the price is rejecting of the support here. And there's another tool which I use is the Fibonacci retracement. This is my third one to find the entry. From this point to this point, I will find. And this exactly comes under 1 to 50. So this is my selling point. This region is my selling. And you see, after hitting this region, the price is start to reverse. Can you see? And now
Yeah.
I will take my profit up to 2. So I will take my trade here. I will confidently put my short trade right over here. My take profit will, stop loss will go here. My take profit will at least go to this point, 2.7, this one. Okay, so you see, after a while, the price will reach my target and I will close my trade and I will make 2.7. This is a live trade, which I showed you right now. Everything happened in front of your eyes. So when the price actually reversed, I actually told you. So when I told you that this price will reverse, we will actually hear, right? And then the price reversed. Can you see?
Yeah.
So this is what happens when you combine the Wyckoff with the volume. This is what happens, right? You can take confident trades. Okay. Let's suppose if I was taking a trade, what happened is sometimes that I take an entry and sometimes the price hit my SL, and then after SL, I'm out of the trade, and then the price will again test this region and then go down again. So I will lose my trade sometimes over here, and then on the second re-entry, I will win my trade. So let's suppose if I lose -1 here, I made +3 here. So what is my net? My net would be +2. Got it?
Yep. Okay.
So this is, I call it as a risk management. All right. Okay. Okay. Understanding the basic principles of volume spread analysis. This is very important. Okay. Okay. Identify the anomalies and okay, we have done this, reading the HLC bars in relation to volume histogram. Okay. Now I told you. Now HLC bar. Okay, right? Now, what is the connection between these bars and the volume? I must tell you. Right. Okay. The thing is, if we have this kind of bar, let's suppose we have a small bar here. We have this kind of bar here, an average bar. Okay, then I have this bar. Then I have this bar. Which bar should you think should have a higher volume? This one should have a low volume, or this one should have a high volume?
Low volume, I think.
Low volume, because the length of the bar is less. Okay, this one, the volume should increase. This one, the volume should increase. Okay, all right. So we call this as harmony. Harmony between bars and volumes. Got it?
Yep.
So we can say, in other words, we can say is effort is equals to result. Okay, because the more effort we make, the volume is the effort. The volume is the effort. The more effort we make, the higher the result. The more effort we make, the higher the result. What if effort is equals to result? But if I just tell you one situation that the price is increasing here, okay, the volume, the price bar increase here, and then the price bar is again low, right? At this point, this third bar. So what happens here? This one, we have a low volume. This one, high volume. This one, a very high volume. Do you think that this bar should have a high volume?
It can happen, right?
It can happen, but do you think that according to trend, we should have?
No.
No. So we call this as disconfirmation, or you can say anomaly. Okay. Anomaly between anomaly or disagreement between price and volume. Got it?
Okay.
So what happens actually, this, for example, this is an up bar, right? This is a bullish bar because we are going up, so it's bull bar. So where this extra volume is coming from, this extra volume, it should have a low volume, but instead of low, we have a high volume. So where is this extra volume coming from? This extra volume is coming from. Can you tell me? This extra volume is coming from the sellers. Hidden sellers. Got it?
Yeah, okay.
This extra volume is coming from the hidden sellers. So We call it as this situation, which occurs over here. We call it as, tell me, effort is volume, result is price. Okay. So you tell me,
Yeah.
effort is greater than, less than, effort is greater than result. Got it?
Okay.
Effort is greater than, and in the Wyckoff term, we call it as effort. Wyckoff used to call it as effort versus no result. Means there is an effort, but there is no result. Effort is greater than result. Got it?
Okay.
Okay, you got it. Now, if we have this one, okay, let's suppose we have this one here. So this one is known as anomaly, right? Got it? Now we have this one here, the third bar. Okay, and then we have a huge bar. The price is increasing. We have increased bar, increased volume, and now suddenly with this huge bar, we have a low volume. Do you think that, what is this? This is an agreement or harmony or an anomaly between price and volume? This is again an anomaly between price and volume.
Yeah, correct.
Right? Okay, now try to understand. In this price, the price here, where there is hidden sellers, we call it as the price will reverse. Okay, during the hidden sellers situation, the price will reverse. Okay, how about in this situation, the price will reverse or go up? We call this situation as effort is actually less than result. Got it?
Yeah.
It means it took less effort to produce greater effort, to produce greater result. Wyckoff used to call it as ease of movement. Ease of movement. What does ease of movement here means? Okay, the ease of movement means, for example, let me give an example. Okay, you have a car here, right? That
Okay.
okay. So, for example, like you have two cars. Okay, one car runs for 10 kilometer in 1 liter. The other one runs for 20 kilometer in 1 liter. So which car has more efficiency? The one that runs for 20 kilometer per liter, right?
Yeah.
So,
correct.
so this is ease of movement. It means it needs less energy to produce greater effect. So this one means we have where is the volume? Where is it should have greater volume, but it has very low volume. So where is the extra volume gone? My question is, where is extra volume gone? Why did it disappear? So I will tell you the reason. Okay, extra volume is absorbed by buyers to fool or trap sellers. Do you understand?
Okay.
So this move, because usually what happens when the people see a very high volume, okay, and then there is a rejection, but there is no, sorry, very high bar at the top of the bar. For example, low bar, as I told you, that the very low bar, and then suddenly there is a high bar at the people will say, oh, this is the point where the price should reverse, because this is a climatic move. We call it as like a volatile move, right?
Okay.
So we also call it as a climax move. But this climax move should have high volume. But if it has low volume, it means that the buyers are trying to fool sellers to sell the market. But actually what happens, as they sell, the buyers will come here again and will drive the market up, hitting the stop loss of all sellers. Got it?
Yeah. Yeah, I got it.
Okay, all right. So this is a very clear condition. The third condition is, for example, if we have this volume here, okay, here, this bar, and we have this bar. All right. So this bar has buyers, this bar has more sellers. Okay, as we are going up, right? Okay, you see, we are increasing in bar here. We go up. All right. Then we have another bar. We go up. We have another bar. We go down. This one here. Now you see the length of this bar. We have a volume here like this. Then we have increased volume because our spread is increased, right? And then we have more increased volume at this part. Okay, this should have, so this is harmony or disharmony. Is it fine or okay? So
Yeah.
my question is that all this bar and this bar has same length. The length of both of these bars are same, but the volume is on this bar is increased. Can you see? It's greater than this one.
Yeah.
So is it okay or not? Is it harmony or wait, hold on.
It's not. It's not in harmony. No.
Okay. So this is the point, right? So this extra, so this should have high volume. Why this should have high volume? Because this should have high volume. Okay. Why? Because extra volume is coming from the seller's rejection at the top. Got it?
Okay.
Extra volume is coming from the seller's rejection at the top, because as I told you, that sellers will reject this huge here. Sellers are rejecting the market from the top, right? So this will have extra volume. That's going to be this one. So this is fine. All right. So once you
Right.
see this bar, once you see this bar here, like this bar, for example, this bar here, or this bar, okay, where there is a rejection like this at the top. So remember this bar will always have increased volume. Got it?
Okay.
On if this has low volume, for example, this has low volume, it means that sellers are not affected. The price will continue to go up. This will fail if it has low volume. If it is high volume, it will succeed and price will go down.
All right.
This is a secondary situation. Okay, so I will show you on the chart here. Okay. So we call this as rejection volume.
Hello. Is your microphone okay? Hello. Hello.
Okay, did you understand?
Hello. Hello.
Yeah. Did you understand? Any confusion so far?
Yeah. Yeah. Okay.
Okay,
It's all good. It's
For
all good.
example, I told you this bar. Can you see here this bar? This is exactly the same bar which I was showing you. Right? The same bar closing on the top. It goes down and closes on the top. It has high volume. Now this bar and this bar has exactly same volume. Can you see? This bar and this bar is exactly same volume. Now see this bar length and length of this bar. Is the same or not?
Same.
Length of this bar and length of this bar. I'm asking about the range, spread or length of this bar. They both are same, right?
Yeah. Yeah. They look the same.
But what happens? You see the volume of this bar increased. Why? Because it's closing on the highs and extra volume is coming from this rejection. Got it? So it means
Okay.
that from here, when we see this kind of volume, the market will reverse. And you see market did reverse. Am I right?
Yeah.
Yeah. All right. Now, if you see this volume, for example, let me show you another one. Yeah. See, they are roughly equal, but increased volume here. All right. And see, let me show you another one. Let me show you ease of momentum. This one. See, you see this volume. Okay. This volume was, this bar has this volume. Can you see? The previous bar was
Yeah.
low volume, low spread, and it has low volume. And then the volume, the range of this bar, the length of this bar has increased, but the volume has decreased. And it's closing on the
Yeah.
high. Can you see? It's closing on the high. What this situation is known as?
Yeah.
This is known as ease of momentum. Why? Because range has increased, range of the bar has increased. I think you know what is range, right?
Yep.
Okay, range of the bar has increased, but volume and bar has closed on the high. Okay, all right, but volume has decreased. So it means, so it implies that buyers needed less energy to move the price up. Easy?
Yeah.
Hence, ease of momentum, ease of movement. Any confusion?
No.
Ease, I should write it in ease of movement. No. Got it? Here as well, this ease of movement, it shows that the price is going up, that the price will go up, and you see the price after this. Right? And you see here, people will say, oh, now here, this was the situation I was telling you. You see, the price has suddenly increased. You see, huge bar, but you see the volume, what happens to volume? Decreased. If the price was to reverse here, the price should have increased volume, as I told you.
Yeah.
Right? But it has a decreased volume. It means this is ease of movement. So what will happen? The price will come back a little bit, and then it will fool and trap traders. After that, it will go up. So most traders, what will they, when they will sell the market, what will they will do like this, right? They will do like this. They will place their stop loss here. They will, and then they will take profit here. So what will happen? The price will go and start going against the direction, and it will finally hit their stop loss. Got it? So this was not a selling bar. It's actually a buying bar because it's an ease of movement. Got it?
Okay.
Now you compare this one. As the price goes, huge spread. And what do we see here? Huge volume coming here. Can you see? This bar and this situation, they are both are different. Means the spread is increasing. Here the spread is increasing, but the volume is decreasing. So it's ease of movement. This one spread is increasing, volume is increasing a lot, but you see where the price is closing.
Okay. Okay.
So where this extra volume is coming from? This extra volume is coming from this rejection. So what does it mean? It means they are sellers. And after sellers, what happens? The price range decrease and volume also decrease. So what happens? So it means the buyers are losing their energy. This is a point where the price will try to reverse. Got it? After this is the first indication. As I told you before, first indication. Reverse.
Okay. Okay.
Got it? Yeah. Now you see here. Now you see here, okay, you will say, oh, this is ease of movement. The price spread is decreasing. There are sellers. The volume also decreasing. This is ease of movement. The price should go down. But what happens after price should go down? What happens after here? The buyers came in and then it rejects this volume and then it's very high volume, right? So it means the buyers overtake the sellers. Got it? And the price will resume the uptrend here. So here the ease of movement has failed. Here ease of bearish movement has failed. Why? Because of this sellers over, because of this buyers. This is what? This key reverse. This key reverse with huge volume. And the previous trend was also up. The previous trend was also up. Got it?
Okay.
Okay. Now you see this bar is here as well. And the second thing is here as well, that if I should sell or not, the people will sell or not. Okay, I mean, I should sell this market or not. But if you see this market bar, very huge bar, but you see the volume is quite low. Can you see? Quite low volume. Am I right?
Yeah, correct.
So this is ease of movement. It means the buyers need less energy to move the price up. And what happens after this, as I told you, the price will, if we draw this line of support here, from because the actually the ease of movement enter from which part? From on this candle, right? On this part. So if we draw a support line at the low of this support, the buyer exactly came at this point, reject this point, and then drag the price. Can you see?
Yep.
So whenever there will be an ease of movement, you will see you can draw support and resistance line on the highs and lows, and you will see what will happen. Got it?
Got it. Got it.
Now you see this bar here. You see this bar here. This bar and this bar. These both are same length. But this bar is very huge volume, and we have a rejection on the top. So this extra volume is coming from the sellers, right? Am I right?
Yep.
Okay. And you can see here, if we draw a resistance line over here, small, because the rejection occurs over here at this point. The sellers enter the market from this point, right? From the top. And what happens? After we come, this becomes a resistance, a future resistance. And exactly what happens? As the price came to this level, reject this level, we have a key reversal, and then the price reversed. Can you see?
Yep.
Okay, all right. Here as well, if you see the resistance here, right? Now, if I draw a straight line rejection from here, right? Because the seller initially entered from this point, right? Now sellers enter here. Now, what we see, this is first touch, this is second touch of this trend line, and then exactly at this trend line, the sellers came and then dragged the market down. You see increased volume. You see this bar and this bar both have same volume. Can you see? Same spread. This and this have same length, but this has extra
Okay.
volume. Where this extra volume is coming from? This extra volume is coming from the rejection of this because it's closing on the lows. So it's a seller's volume. Got it?
All right.
So always the seller will always come on the edges. So Wyckoff used to call the term as trade on the edges. Edges means support and resistance of trend line. For example, this is resistance, this is edge. This line is the edge. So if anything goes here, it's the edge. This is edge. Got it? This here is an edge. This is edge here. So sellers and buyers always come on the edges. Got it?
Okay. Okay.
All right. Yeah. Now you see here, this point here. The price goes down here, right? So there will be sellers here, right? Sellers. Okay. So this is ease of movement, right? Because the price is decreasing. Got it?
Yep. Got it.
Right? Okay. But what happens here? Then after that, the price goes down here, and then because this we can form the edge like this and edge like this. All right. Now, as we form the edge, what do we see here? The buyers try to sell down and then reverse. And as I told you that here is an ease of movement over here. You can see ease of movement on this bar.
Yeah.
So we can draw a support line from here. This is an edge here. And exactly at this edge, the price, the sellers came, reject this market, and then went up. And then here you can see this point here. What happened this point? This extra volume is coming from the sellers. Am I right? You see this huge volume here, increase in volume, and very low volume. It means that the buyers are exhausted over here. Okay. So if we, and I told you, and I forgot to tell you about one more thing. Okay, so I told you about these two situations, right? There's one more situation like this. For example, let's suppose we have these buyers, we have good spread, right? Increasing spread, the price is increasing, and then we have a small bar. And then the small bar, what do we see here? That we have increasing volume, increasing volume, increasing volume, and then the volume is increased. When and a price is at the top. When you see the price is at the top, okay, the price is moving up, and at the top, the range becomes small. You see the range of this bar becomes small, and the volume becomes small. What does it show you? Buyers are using energy, and sellers will soon dominate the market. Got it?
Yeah, got it.
Yeah, because that's why we have because if the buyers were very strong, then obviously we should see increased range, right? But we see suddenly we see decreased range and very low volume. So this means the buyers are losing energy. But if we see high volume like this, very high volume like this on this bar, so what does it mean? This is sellers or buyers?
Buyers.
This is sellers. Why? I tell you, because I will give you notes of it so you can learn this and then analyze on the chart. Okay? Because small range bullish bar should have small volume, right? If
Yeah.
it has what to say abnormal volume, abnormal high volume, then it means hidden sellers are entering the market. So the point is whether the volume is increasing or decreasing on a small bar, it always means that the prices that the sellers are coming into the market. If it's an uptrend, if it's a downtrend, then obviously the buyers are coming. Got it?
Okay.
Everything clear? So we call this situation as no supply. For example, I tell you about this one. Here, as the price is going down, what do we see here? Now see this volume here. You see this bar here, very huge volume. And before this bar, we have a small bar here. And you see, what do we see here? Very low volume on sellers. Can you see? As the price is going down, we have a very, very low volume on the sellers. And then suddenly on this, what do we see? A high volume on this bar. You see? A high volume. Here throughout we have a low volume. Here we have a very high volume. Why we have high volume? Because of this rejection. Can you see rejection?
Yeah.
So it means that the sellers are buyers are entering the market from the top. So everything we have here, so if we combine everything, we know that the buyers are actually in control. Buyers are entering here. Okay, the sellers do not have enough volume. You see the sellers volume is decreasing. We have a no volume, very low volume, right? Got it. Here as we go up here, you can see as we go up here at this point, what do we see here? As we go up here, you see these two bars. The range is decreased, and you see the volume. The volume is below average. Can you see? The volume is below average. Can you see below average volume?
Yep. Yep.
It means that what does it show you? It shows you that the buyers, as the price is reaching this resistance, can you see resistance? At resistance, what happens? The range of the buyers is becoming small and the volume is becoming small. It means that the buyers are losing their energy. So from this resistance, the price is gonna reverse. And what do we see here? We have a huge volume here, a very huge volume. You see the bulls bar. Okay, you see a very, very huge volume on the top. Right on the resistance, we have a huge volume. Okay, so this extra volume, this extra huge volume, you have to see why there is a huge volume. So now we see here that there is a rejection on the top. Can you see?
Yes.
This extra volume is coming from the sellers, hidden sellers. Got it?
Okay.
That's why there's a reversal and the price will reverse. And if you draw if you draw one more thing, if you draw a channel like this, okay, a channel like this, you draw it, I'll draw it. And it will do like this. And if you draw these two here, you see, what do we see here? Shortening of thrust. This is shortening of thrust. SOT, right? SOT, huge volume. And then we have a last resistance here. And then the volume, and you can see the volume is decreasing as we go up. Range is decreasing. And then there's sudden volume and rejection. If we combine everything together, we know that this is actually a Wyckoff. Wyckoff combines all the clues with the volume and chart is giving, the price is giving. Got it?
Okay.
Yeah. Now, if you see this bar here, this one and this one. See, now, as I told you, that as the price is going down, the volume should decrease. But if you see this bar, and this volume, okay, this bar and this volume, they both have a similar length, but we have an extra high volume coming over here. This extra high volume is coming from the buyers. Got it? And you can see that the next bar, after this bar, the next bar is the buying bar. Can you see?
Yes.
So it means this extra volume was coming from the buyers and the price went up. Got it?
Yep. Sure.
Yeah. All right. Now, if you see here, this one here, you see we are suddenly going down, and then when we are going down here, what happens to this one? You see this bar here, as we go down, the volume is decreasing and decreasing, spread is decreasing. Can you see?
Yep.
The length of the bar is decreasing and volume is also decreasing. So it means that sellers are losing control. They are losing energy. And then what we see here, a huge bullish bar came with huge volume. It means, and it came on right on this low. It rejects the low and goes up with a very high volume. It means that the buyers are entering at the low. Can you see?
Yes.
And as the price tests this region, and now you see here again. Okay, now you see here again. Now the sellers go down and we have a decreasing volume. Can you see decreased volume?
Yep.
What does it show you? That sellers do not have energy. And after that, what happened? The price reversed. And then the price came back here. Again, if we draw the extent here, what happens? As you go down here, ease of momentum, but then the buyers came here again. And after that, what do we have? I told you about this situation. Very low volume bar. If you have a low volume bar, low spread bar and huge volume, we call it as a effort versus no result. Do you remember? Just a while back, I told you.
Yeah.
It shows me a hidden seller over here. There are hidden sellers over here, hidden buyers over here on this one. They're hidden buyers. So this extra volume is coming from here. Got it? And then after that, what happens? The price shoot up. Does it all make sense?
Okay.
Yeah. That's it. So this is for today's session. Okay.
All right.
Yeah. So I need to open the fast right now. Okay. So I will open fast, and then I will also give you the notes by tomorrow. Everything which you have covered so far. So you can just read it, and then you can see the notes, and then you can practice some charts.
Yeah. If I have any questions,
Yeah,
can
you
ask
can
you,
ask.
right?
Yeah, you can ask. So far everything is making sense or not? Just tell me this.
Yeah.
Yeah. So you see how it's Wyckoff and everything works.
Yeah, Wyckoff looks powerful, man.
Yeah, you see right from here, when I told you that you're selling, they sold, and after that we see this bar, and I told you there will be a bias, and you see what happened. Just a while back, I showed you this chart, and what happened? The price went up. So I was right. So if I have taken this trade, I would have win this trade because my last take profit, this is the last support, right? So I will take my trade right over here. You see, this is a point where I told you that I would take my trade. Do you remember when I was showing you this chart? We were right over here.
Yeah.
And we hit our target. That's it. It's not mean I win 100% of my trades, but like I win around 85 to like 75 to 80% of my trades. And rest of the trades, I do have losses. But if I have a solid risk management, then I will be profitable in the long term. Got it? Every day.
Yep.
That's it. Okay. So let's end this session now. Okay. So bye-bye.
All right. Thank you.